Hello, my friends. Hey, it's John King. It is Friday, the 30th of January, the last week, the last business day of January. Excuse me, time is flying by, and I am super excited to continue to bring you guys weekly updates on what the heck is happening in the market. So we've had a busy week this week. We had the Federal Reserve meeting on Wednesday, kind of a no big deal meeting. They didn't change the interest rates. There was some dissent. There was some differing opinions on what we should be doing with interest rates, but that's not new news. And so we're dealing with that piece. We do have a big piece this morning that Trump nominated Kevin Warsh to be the Federal Reserve Chairman. That's a big thing that's happening right now. And then the other thing that's happening right now is just Trump's push on affordability and on kind of where he is, what he's looking for in housing, which has been one of my themes for this month, and I want to really continue on that theme. And so one of the things that Trump is really pushing right now is he wants to keep house prices high, but he wants to drive interest rates lower, which can be helpful. Like what he's trying to do is he's trying to make everybody happy. Okay. And you can't make everybody happy, but he is trying to. And so what he's doing is saying, look, I got to fix affordability. Well, affordability really is the difference between your income and your monthly payment. It's that simple. So one way to fix affordability is to drive incomes up. The problem is that creates an inflationary effect. If you drive incomes up too much, people have a bunch of money, they end up spending that money, it causes cost of goods to go up, and then nothing is affordable. So it's really a delicate balance that we're dealing with. And we've got Trump hammering, saying, no, I'll just fix it with a hammer, okay? And maybe it'll work, maybe it won't. But the biggest thing that he's looking at right now is saying, look, I don't want everybody who has a home today to lose all their equity. So I don't want to do anything that's going to drive house prices down. But I also want to make it more affordable. Well, if you're not going to bring house prices down, which, by the way, he can't control any of these things, but he certainly can influence them. So it's kind of like curling in the Winter Olympics. I think it's fun watching curling. I don't know if you ever watched curling, but you can't touch the ball. I don't know if the puck, the curl thing. You can't touch it, but you can influence it. You can sweep in front of it. You can sweep around it. You can do things to influence where the puck is going to go. I hope it's called a puck. I have no idea. But you can influence it. The same thing with Fed, same thing with government, same thing with Trump, trying to influence where interest rates are going, trying to influence where house prices are going. But again, three real major components of affordability is your income, the price of the home, and interest rates. Now you have property taxes and homeowners insurance as part of the payment. But in general, we've got Trump really pushing hard to say, hey, I want to keep prices high because I don't want to make the people mad who have homes right now that have a lot of their savings tied up in the equity of the home. But I also want to help people who are first-time home buyers or renters get into a home, and we got to make the payment lower. The only way to make the payment lower is to lower the interest rate while the home price stays the same. Therein lies the rub. Lower interest rates does not always mean a lower payment. Why? Because typically when interest rates go down, more people come to the party wanting to buy a home. That creates demand, and there aren't enough homes built for the number of people that want them. So if we lower interest rates, that's going to make some of you who have said, John, I can't afford a home at today's rates. I can't afford a home at today's payments, but I can afford the home if interest rates were lower. Well, that means you're going to become a buyer again. And when you become a buyer again, you're part of the cause for home prices to go up. And so higher prices can cancel out the rate savings. So now it's an issue of timing. It's an issue of how are you going to buy? Now, this is a whole thing about, buy now, marry the house and date the rate. That has been a horrible relationship for the last 3 years. And I don't see it getting any better in the short term. But the truth is, if you wait to buy a home, the chances are rates will come down and house prices will go up. And then you've got a catch-22 because you're not actually saving any money. The people who will save money are the people who already bought or are buying today, who can afford the payment today, because you got to get in being able to afford the payment, but they're going to benefit because they're going to see that, hey, house prices are going up, they're gaining equity. Interest rates are going down, they can refinance and lower their monthly payment. So here's the deal. Buyers can still feel stretched even if interest rates drop, because there's a good chance it's going to drive up housing prices. Now, I don't know what Trump's going to do to say, well, I'll fix that by making sure prices don't go up. Again, he can't control anything, but he can try and influence it. So maybe he's got some cards up his sleeve that he's saying, hey, I could lower house prices by doing this and that, but I don't want to do that. So I'll lower interest rates by doing these other things. Then I'll jump in and do the things that would lower house prices, because that would keep house prices the same. You get it? You're putting downward pressure on house prices while rates are putting upward pressure on house prices, and that could theoretically keep them the same. That's quite a delicate balancing act. We're going to have to see how good he is over the next 3 years and being able to pull that off or not. Now, the Fed met this week. Everybody worries or wonders, oh my gosh, mortgage rates didn't change because the Fed didn't change their rates. Shocker. I've said this a million times. The Fed does not control interest rates. Mortgage rates did move this week. As a matter of fact, they started going up because there was concern about what's going to happen with the new Federal Reserve chairman that Trump was going to announce today. He announced the new chairman, and the markets are calming down a little bit. They like the choice in general of who they chose. It's going to be kind of ironic because the current Federal Reserve chairman, Jerome Powell, guess who put him in office? Trump did. So Trump put Jerome Powell in office back in his first term. And now he hates Powell and thinks he's horrible, and he's getting the Justice Department to sue Powell, all this stuff because he's just horrible. And now Trump is putting in Kevin Warsh. Now, the question is, Warsh is not seen as somebody who's really going to push interest rates low. But Trump today in his press conference is like, oh my gosh, he wants interest rates low just like I do. It's going to be great. He's fantastic. We'll see, because he's kind of interviewing for the job. You got to tell the guy who's hiring you what he wants to hear in order to get the job. And then once you have the job, this is a guaranteed job. You can't get fired from it. Now he can do what he wants to do. Same thing Jerome Powell did. We're going to see. Okay, the president gets to appoint. Congress gets to nominate. President nominates. Congress confirms. And then you're in. Once you're in, unless you break the law. So that's what we're going to be seeing as the wild ride coming up. It's supposed to be a handoff in mid-May, but we'll see. Because some of the people in Congress are saying, we're not going to play ball with confirming somebody new while the government is investigating the current guy, because we just think you guys are taking this way too far with this investigation, and we're going to force you to cut it off at the knees and not continue with this investigation. So there's a lot of drama to come. Okay, what markets care about is inflation, and they care about the expectation of inflation, not what happened with inflation. That's really weird, because today we had an inflation report. And if you've been watching me at all, you've heard me say inflation is bad for mortgage rates, but unemployment is good for mortgage rates. So if inflation goes up, it means everything is going to cost more over in the future. And therefore, your mortgage rates, the person who is receiving the interest on the mortgage says, hey, that money is not going to be worth as much over the next 30 years because inflation's high. I want you to pay me more interest now since it's not going to be as valuable down the road. So that causes mortgage rates to go up. But it's about not what happened with inflation last week or last month, but it's about what the expectation is of inflation. What happened with inflation is done. But when inflation is high, it's expected that it may continue to be higher. And so today we got an inflation report that should have caused interest rates to go up, but it didn't. Why? Because the expectation of inflation is not that big of a deal. The nuances of the report kind of tell a different story than the headline does. And so be careful when you see headlines. Be careful when you're reading the news because they're trying to shock you. Look deeper and really just look to me. I'm going to be here to help guide you through this process. Okay. So I kind of already discussed this, but rate cuts don't guarantee mortgage relief. Now, they do help people who have higher rates as long as they qualify to refinance. That's another challenge because we've had some areas where house prices have dropped. And now you're underwater because you put a very small down payment, or you don't have enough equity to cover the fees for refinancing. And so you could save money off of your interest rate, but you can't because you've lost your job, because your credit score is lower, because you don't have enough equity in the property. There's a lot of things here that a lower mortgage rate is not a silver bullet that causes that solves the problem for everybody. And so this is helpful as interest rates fall, but it doesn't guarantee mortgage relief. Okay, so here's the thing, and I'm kind of summarizing what I said earlier, which is waiting for mortgage rates to drop might sound like a great idea, but it's going to be harder to get your offer accepted on a home. The problem with the human condition is we want what we don't have today. We want what we can't reach. We're happy with what we have, but once we have it, we take it for granted. And so if I rewind back to 2020 and 2021, every buyer I talked to said, oh my God, I don't care that we have low interest rates. I just wish that I could get a seller to accept an offer on my home. on a home, meaning I'm writing an offer on a house and the seller, I can't get anybody to agree to sell me their home. And so that was the wish. And then your wish came true. Interest rates went up, which back in 2021, you're like, I don't care if rates are higher. I just want to get an offer accepted. Now in 2023 and 2024 and 2025, you can get your offer accepted. In a lot of cases, you can get your offer accepted. But now you're paying a significantly higher payment. And everyone's like, oh my God, just if you can just lower interest rates so I can have a lower monthly payment. But we're going to go back to where we were in 2020 and 21, theoretically, which is you're going to have more competition. House prices are going to go up. You're going to have to bid over the asking price and come up with cash. You're going to be a lot of challenges that come from significantly lower interest rates. Now, there's a middle ground, but be careful what you wish for because you just might get it. Affordability is the combination of rate, price, and timing, but it has to do with your income. Incomes are increasing. So if we were patient, we are not patient people. Okay. The president of the United States is not a patient person. I will say over and over again, guys, I do not speak about politics. I do speak factually. The president is not patient. He wants to win the midterm elections. He wants the Republicans to have a leg up on the midterm elections, which means he needs to make people happy now. The right fix to housing affordability is patience, is keeping interest rates and house prices where they are and waiting for incomes to rise, because over time, incomes rise. All right, I've got a question here. Booker says, housing has been such a mess since 2008. Even when rates were low, people complained about the housing market. It's just now we're looking back at the low rates and buyers want them back. Amen. Amen. It is a mess, but it's a beautiful mess. It's kind of one of those things where all good things are challenging. Okay. So you've got to look at it saying, hey, home ownership is challenging, but at the same time, it is the single greatest creator of wealth in the United States, greater than 401ks, greater than anything else. And you can say, well, no, John, it's inheritance and people getting money from family is the biggest wealth transfer. But guess where that wealth came from your heirs, the people that you inherited it from. Most of it came from real estate. So real estate is a mess, but it's a mess that's worth being part of. And that's the thing, that if you can afford the monthly payment, get on the roller coaster and just stay on the ride long enough. Okay, you're going to feel like puking a couple of times. You're going to wave down the guy saying, please let me off. But the truth is, over time, it's kind of like owning stocks, but amplified. Owning stocks can be stressful because, look, I don't know where the price of the stock is going. They just fell. What do I do? Do I pull out? Do I keep going? Just stay your course. People lose more money in the stock market by trying to jump out and jump back in. And yes, some people win, but some, not all, not most. And so it's the same thing with the housing market. It is for sure a mess, but I got to tell you the truth, Booker, it was a mess back in the early 90s. It was just a different kind of a mess. And we had the same concept where interest rates went up significantly. House prices came down. Everybody thought it was the end of the world. We've had so many cycles like that. In the early 80s, we had that. We just feel like it's worse today. Why? Because we're living through it. That's the biggest thing that I'm looking at. That people are living through these things and they're saying, oh my God, this is horrible. No, it's just our version. It's just our version of what we're dealing with. But if it was easy, everybody would do it and there wouldn't be the big benefit. The big benefit comes from taking risks. And that's what I really want to impress upon you. All right. So affordability is really the key as we're going forward, is how do we make housing more affordable? Trump is doing everything he possibly can to do that. His motives, you might question. His actions and the things that he's doing, you might say, hey, I'm not really sure if that's going to work. Here's the one thing I will tell you. I admire the fact that he's willing to try things to get housing better. Now, again, not going to get political. Don't care if you like him or don't like him. Not going to tell you if I like him or don't like him. But he is thinking outside the box. There is no bad idea that he will explore, and then he'll decide it's a bad idea after he's explored it. And so that really is the key that I'm looking at, that things are trying to be changed. The administration is trying to implement change. And that is going to lead to a lot of volatility, but hopefully it leads to some good outcomes. Only time will tell. All right, quick diversion. Dream for All is back. If you're in California, if you're a first-time home buyer, first-generation home buyer, you need to join my webinars. I am doing multiple of them every Monday at noon. I'm doing a live stream, kind of like this one, where I just talk about some specific topics. And then every Wednesday night at 7 o'clock, I'm doing an in-depth review. It's an hour long, covering everything from start to finish that you need to know about to get in on the Dream for All program. If you know somebody that you think should get in on that, let me know. I am interviewing for the job of taking great care of you, whether you're looking to purchase a home, refinance a home, whatever it happens to be. I'm interviewing for the job of being your lender. Really appreciate your trust. If you guys have questions about anything at all, if you're live, obviously you can post those questions right now. I'll answer them before I go. If you're watching recorded, just know that I'm here. And I'm here as a resource. If you want to schedule time with me, scan the QR code up above. If you have questions you want to just ask on YouTube, feel free to post it on YouTube. And please help me to grow my subscribers. So share this with people that you think would find it valuable. Like the video. And if you haven't subscribed, please subscribe. Guys, thank you for joining. Have an absolutely wonderful weekend. We'll talk to you next month. Bye-bye.